When it comes to insuring your vehicle, we all know that the more accidents you have, the higher your premium becomes. But what if your insurance company started offering discounts for not even driving? Well, it turns out that that's just around the corner. Hi, I'm Nikki Gordon-Bloomfield and welcome to Transport Evolved, where today we're going to be talking about ways that you could potentially save money by buying a very expensive autonomous car. Now, as I alluded to in the introduction, the safer you are as a driver, generally, the less you pay for car insurance. Now, traditionally, insurance companies have used information about your driving record to determine how safe you are as a driver. For example, if you've got lots of speeding tickets and you've been involved in several car crashes in the last couple of years, your insurance premiums are going to be pretty high. In fact, you may find some insurance companies won't even offer you car insurance. If you've got no speeding tickets, you've never got into trouble with the police behind the wheel, and you have not had any accidents in the last couple of years, your insurance premium is going to be less. Of course, there are other factors too, such as your age, your occupation, where you live, how much you drive, and unfortunately, your gender. Now, in the last couple of years, we've seen a rise in the number of insurance companies offering dongles or smartphone apps to try and determine if you're a safer driver using your own real-time driving data. They basically log what you do behind the wheel, how fast you drive on average, how hard you accelerate or brake, and if you do any weird steering maneuvers. And that data helps the insurance companies figure out if you're a safe driver or if you're a less safe driver. And then it uses that information to calculate how much it should charge you for auto insurance. But a new startup in the US called Root is going one step further. Not only does it base all of its insurance premiums on real driving data from your smartphone, but it also is now offering discounts to Tesla Model S and Tesla Model X drivers who make use of the Autopilot driver assistance feature that's standard on every Tesla made from 2014 onwards. The reason? A recent study by the National Highway Traffic Safety Administration, which concluded that cars with active Autopilot engaged were 40% less likely to have an accident than those without it engaged. And that means if you use Autopilot, you're less likely to get involved in an accident. And from an insurance company's point of view, that's a really good thing. If you're safer behind the wheel thanks to Tesla's Autopilot, or in fact, any autonomous driver assistance package, then you're less likely to get involved in an accident. And that means that the insurance company is less likely to have to pay out because accidents are less likely to happen. And that means that insurance companies are willing to lower your premiums. So it's smiles all round. Now, Root says that it will give you a discount straight off the bat for owning a Tesla because your Tesla comes with active safety features enabled all the time, even if you've chosen not to enable Autopilot. Once it's given you that discount for just having a Tesla, Root's system will then calculate how much time your car has spent driving itself and apply tiered discounts to your insurance. So if you commute every day on a freeway and most of your commute is with Autopilot enabled, you're going to save a bucket load of money. But here's the problem. Not only does your app know exactly what you've been doing behind the wheel of your Tesla, or any other car for that matter, but it also penalizes people who can't afford cars with autonomous drive technology. And this sets up a very troubling precedent looking forward. It's fair enough to reward someone for being a safe driver. I'm all behind that. But rewarding someone who has a car with an advanced safety feature gives a discount to someone who probably doesn't need the discount in the first place. Over time, however, we're going to see a point in the future where people who can't afford to buy a brand new car with autonomous drive technology are essentially going to be penalized for driving an older, non-autonomous vehicle. And that could raise the cost of driving quite a lot for people who really can't afford to pay any more for their car insurance. Now, traditionally, if you've owned an expensive car, you've had to pay more for your insurance. If you live in an area that's not so good, you've had to pay more for your insurance. But now it looks like insurance companies could be shifting to a point where you pay less insurance if you own an expensive car with advanced technology. And I'm not sure that's fair. What do you think? Is it fair? Leave your thoughts in the comments below. Don't forget to like, comment, and subscribe. And if you liked what you saw today, please consider keeping us independent and impartial by making a donation to our Patreon crowdfunding campaign. There's a link in the descriptions below, as well as one at the end of this video today. Thanks for watching. I'm Nikki Gordon Bloomfield. I'll be back tomorrow, but until then, keep evolving.